It's time to break your fixed rate mortgage in Canada. That's right. There's a very good chance that if you have a fixed rate mortgage in Canada at this moment that you've renewed in the last couple of years, it's very likely time that you should consider reaching out to your bank, breaking that mortgage, paying an astronomical penalty, because the way things are right now, there's a very good chance that over the term of your mortgage, you're going to save a whole bunch of money by doing so. And that's what I'm going to talk about in today's video. So if you'd like to stay up to date on the Canadian real estate market, please subscribe to the channel. Click the like button on this video for saving money on mortgages, which only means that the banks are going to make less interest ideally, and you will put more in your pocket, or at least in your home's equity. And if you are looking for help trying to navigate through this real estate market at the moment, I'm not a mortgage broker. I'm going to talk mortgages here today. I'm a real estate agent. So if you're looking for help in Surrey or the Fraser Valley, you can book a call with me right now using the link in the description below at a time that works best for you. Now let's hop into why right now is likely a very good time for you to break your fixed term mortgage when usually it's not. Starting off with last week's events. So we had the Bank of Canada last week cut the overnight rate by 0.5%. That's their largest cut that they've had now since like emergency lockdown time. So we're seeing a deep cut, but if you're on a fixed rate product, that doesn't help you at all, because that rate, that Bank of Canada overnight rate, does not affect your mortgage at all. It actually doesn't even affect the fixed rate product mortgages. Those are actually affected by something called the bond yield. Now, the bond yield has dropped dramatically over the last few months, but it's kind of starting to bounce around a bunch. So that is leading me to believe that yes, even though variable rates will continue to drop, that the bond yields will now probably start to stabilize, and we're going to start see those variable rates come down lower, likely, than the bond yield rates, meaning your fixed term product. So we're going to go back to what should be a normal mortgage environment where you're variable. At one point here in the next year, hopefully, we're going to see those variable rate mortgages come down below the fixed rate product. But right now, they are still inverted, meaning that on a 5-year fixed rate, you're probably still going to get a better deal. But a while back, definitely last year, 5-year fixed rates could have been northwards of almost 6.5%, which was absolutely crazy. I want to say last January, they were somewhere just over 5%, which was really, really good. But now we're starting to see fixed rates anywhere from about 4.29%. And there's even one bank out there offering 3.99% on a 5-year fixed rate. So if your current interest rate on a 5-year fixed rate, or maybe even a 3-year fixed rate, I don't know, you'd have to do the math, but if you have a locked in rate over top of the 5% mark, you should very likely be taking steps to see if you can save a whole bunch of money by breaking your mortgage and locking into a new term, but only after you do a couple of things. And yes, this is going to take some work. If you want to save some money, this is not simply you just get free money. You're going to have to do a little bit of work here. Step number one, you need to call your current lending institution, whether that's TD Bank or Scotiabank or whoever you're currently with at the moment. You need to find out what your penalty for your mortgage, if you break it, should be. And I say should because it is a moving target. There are 2 ways that banks calculate the penalty for your mortgage should you break your term early. The first is 3 months of interest. So 3 months of interest, really simple. You can go into your account. You can see how much interest you pay on your mortgage each month. You times that by 3. That would be the minimum penalty that you would take on. However, the banks have this magical number that nobody understands at all, and that's called interest rate differential. And this is only something that your bank can give to you. The way they calculate that is they take your current interest rate, they compare it to what they call the posted rate, which is literally just a number that they make up. It's whatever to their benefit to make the most amount of money. The posted rate is not anything that matters to anybody. It's just a number that the bank makes up for themselves. They compare the difference in interest. And then if that number that they come up with is larger than 3 months interest, you get charged the larger amount. If it's smaller than 3 months interest, then you get charged the larger amount, which is 3 months interest. So the only way you can obtain this information is to call your bank and find out what that penalty is. And I will warn you, if you might say, for instance, pass a certain date, like the anniversary date of your mortgage, that number will change. And the reason I'm putting this video out right now is because right now, those posted rates are actually still quite high. And the offerings that the banks are offering, for instance, I think CIBC right now is 3.99 for some products. Those rates are quite low. So you can do the saving, but again, this goes back to your actual rate that you have right now versus the posted rate. When those posted rates start coming down, as we assume that they will in the coming, maybe even by the time this video is out, but in the coming weeks and months, those posted rates are going to start coming down. And the lower the posted rate gets in comparison to your high interest rate that you're paying, your penalty is actually going to grow. So this is kind of the sweet spot, and why I'm putting this video out right now is that as long as those posted rates stay high and you have a high rate, it's actually one of the better times to refinance, because sure, rates might continue to get a little bit lower in the future, but you now will have an even bigger penalty, of which might not make sense to pay in the event, again, that those posted rates start to come down. And then step number 2, after you phone your bank and you find out what your penalty would be if you were to break your mortgage, now this is the key. Don't call your bank and expect that they're going to now give you the best rate. They've already got your money, and they won't really totally hate it if you take your mortgage somewhere else. So very likely your next step after finding out what your penalty should be, you need to phone an independent mortgage broker or at least another bank. Probably an independent mortgage broker is a better way to go. And you want to find out where they can get you a better deal. And I guarantee, and by saying the term guarantee, I don't actually mean I guarantee it, another bank out there will offer you better than what your current bank is. Let me give you an example. I know somebody right now that has a 5.09% interest rate. Their penalty is somewhere between $5,000 and $6,000. Their current bank is offering them an interest rate now much lower at 4.54%. But after speaking to an independent mortgage broker, they have found another bank who's willing to do the same mortgage at 3.99%. So even though, yes, indeed, they would save money by terminating their current mortgage and staying at the same bank, they'll save even more money by terminating their current mortgage and switching banks. And yeah, that might be a pain in the butt, but it's going to be worth it as long as your penalty is not too high. Now, again, I'm not a mortgage broker, so I don't benefit off of this at all. If you want to sell your home, great, give me a shout. I would love to do that for you. But what I will do is I will link down below in the description a link to my preferred mortgage brokerage company, Citywide Mortgage Services. Click the link down below there. They may be able to help guide you in the right direction to find the new rate. But again, that's step number 2. Step number 1, reach out to your bank, find out what your penalty is. Take that number, apply it against your future savings on the lower interest rate that could be offered to you by a brokerage like Citywide Mortgage Services, and start saving money. This is going to be a fleeting opportunity. This is not going to last for very long. And as a result of that, don't delay. This is an opportunity to soften the blow from what has been crazy high interest rates, and I don't think it's going to last very long. Thank you so much for subscribing to the channel, clicking the like button, and we'll see you in a couple of days.